In this video, we're gonna talk about 5 monthly dividend stocks that will pay your rent. We rank them from longest time to reach $3,000 per month to the fastest option that could get there in just 14 years. All of these are going to be paid and invested every single month. So without further ado, let's jump into it. Now, if you're new here, we're all about taking money that we earn and investing it. It doesn't matter if it's through a side hustle or a main job. That money should go to work to create more money. Now, when you're young, time is your biggest asset because you have time on your side. What does that mean? Well, if you're young and healthy like myself, you've got a lot of risk tolerance. You can handle the ups and downs of the market. And if you invest with time on your side, you don't have to sell your investments at a loss. For me personally, I'm okay with the bumps along the way, because I know that I'll retire off of this money. The goal of this video is to show you how much you need to invest per month to receive $3,000 in dividends. And then I'm give you 5 options that range anywhere from 14 years to 30 years. By the way, if you do make it to the end of this video, I'm gonna share with you my favorite option. It might not be the best for everyone, but I really think it's the best one out there. Also, remember that past performance is no indicator of future results. This is just a fun little video where we get to see what is possible with compounding. Okay, let's get started. We're gonna start with Main Street Capital. They pay a monthly dividend and they have a nice blend of common and preferred shares. In my opinion, I think this is a good company. I personally own their preferred stock, and so far I'm very happy with it. Let's look at some stats. The current price is around $21.53. The dividend yield is 7.2%, and it's growing at 3.86% per year. Their price has grown an average of 5.3% per year over the last 5 years. Now, let's figure out how long it would take to get to $3,000 per month with this investment. I'm assuming that everything stays the same, meaning dividend growth rate, price growth rate, and price per share. The answer is it would take approximately 30 years to get there. If you want to keep up with this video and calculate everything yourself, I'll link to a spreadsheet in the description. Next up is Realty Income. Realty Income is a real estate investment trust, better known as a REIT. The name of the game with REITs is to own and manage properties that throw off cash flow. Now, REITs pay dividends at a higher rate than most other companies because they're required to pay out 90% of their taxable income. Currently, Realty Income is trading at $67.37 per share. They have a dividend yield of 5.95%, and it's growing at 3.9% per year. Their price has grown an average of 3.2% per year over the last 5 years. How long will it take to get to $3,000 per month? Approximately 28 years. No. 3 is the WisdomTree U.S. High Dividend Fund. This is an exchange-traded fund that covers the U.S. High Dividend Index. This index tracks high dividend-paying stocks in the U.S. equity market. This fund tends to track larger cap companies, which means they're a bit more stable than smaller cap companies. DHS is currently trading at $56.68 per share. It has a dividend yield of 3.67%, and it's growing at 6.66% per year. Their price has grown an average of 2.25% per year over the last 5 years. So, how long will it take to get to $3,000 per month? Approximately 25 years. Now, before we move on to the next 2 stocks, I did want to remind you that if you're getting value from this video, please hit that like button. Also, if you've never checked out our free newsletter, it's the perfect place to start. I'll leave a link down below. Let's continue on. No. 4 is Sabine Royalty Trust. This is a royalty company that owns mineral and other natural resource interests. Think oil and gas. SBR is currently trading at $35.37 per share. It has a dividend yield of 4.16% and it's growing at 8.13% per year. Their price has grown an average of 4.1% per year over the last 5 years. How long will it take to get to $3,000 per month? Approximately 23 years. Now, before we get to the best option in my opinion, I want to share with you a few things that I want you to watch out for. There are some risks when it comes to certain dividend stocks. I want you to be aware of them. The first is that if a company pays out a very high dividend yield, usually that's a red flag. The higher the yield, the lower the chances that it will continue to grow at a high rate. It might not even grow at all. And sometimes when a stock has a very high yield, it's because the price has plummeted. Next is the concentration risk. A concentration risk happens when a company has a majority of their revenue coming from one customer or one area. Usually, if a company falls into this category, it's because they haven't grown and evolved with the times. Last is bankruptcy. Companies that pay monthly dividends tend to have a lower credit rating because they're paying out more money to shareholders. Monthly dividends are more common with REITs because they're required to pay out more of their income. Alright, now on to the best monthly dividend stock in my opinion. The ticker symbol is FTH, and this is the first Trust by Right Income ETF. I want to point out that this one has the highest risk. However, it also has the highest reward if you're willing to take on that risk. When it comes to ETFs, you've probably heard of SPY, QQQ, and VTI. These are all great ETFs. However, they don't pay dividends. FTH is very similar to these three, except they pay monthly dividends. To keep things simple, FTH sells covered calls against their underlying holdings to generate premium income. This allows them to pay out a higher dividend yield to investors. Now, you might be thinking, why would anyone want to sell their stocks to buy back the same stock? Well, when you sell a call option, you still keep the underlying stock. The call option gives the buyer the right to buy the stock from you at a certain date at a certain price. If the stock is above the strike price on the day of expiration, then the buyer will exercise their option and buy the stock from you. In that case, you'd get the benefit of the higher stock price and keep selling cover calls each month. Now, if the stock is below the strike price on the day of expiration, then the buyer won't exercise their option. In that case, you still keep the premium that you received for selling the call option. Let's take a look at some stats. FTH is currently trading at $45.70 per share. It has a dividend yield of 8.5% and it's growing at 9.43% per year. Their price has grown an average of 1.2% per year over the last 5 years. How long will it take to get to $3,000 per month? Approximately 14 years. That being said, I do want to warn you that there are some downsides. As I mentioned, this is a covered call strategy. That means that there's limited upside potential. If the stock starts to really climb, you'll miss out on that upside because you're selling your shares. Now, another downside is that it might underperform during volatile markets. Finally, since it's selling options, you need to own the shares to sell them. So, that means that you're holding more shares than you normally would. If you're interested in learning more about FTH, I'll link to a video that I made about a year ago. If you're looking to invest in dividend stocks, then I think these are a great place to start. If you want to learn more about the best dividend stocks for beginners, then check out this video next. Thank you guys so much for watching. Until next time.